On an adjusted EBITDA basis, we've improved by 40 points just in the last 2 years. So that trajectory is actually moving up pretty rapidly. And at the same time, we continue to open up many new active members quarter after quarter. We had an outstanding Q1. We grew our active member base by 23% year over year. So we're seeing growth in active members. We're seeing growth in revenue.
And that was Chime CEO Chris Britt on CNBC earlier as the fintech company makes its debut on the NASDAQ this afternoon. The shares just opened around 43. Pretty nice pop after pricing at 27 last night. Currently values the company around $17 billion. And this IPO follows a wave of similar debuts from the likes of Voyager, eToro, and Circle lately. So is the window now fully open for companies to go public? For more, let's bring in Duncan Davidson. He's Bullpen Capital's partner, along with Logan Bartlett, who's Redpoint Ventures managing director. Welcome to both of you. Duncan's in the Arctic and joins us from like a ship up there. Duncan, this is such a classic VC type of interview to be holding. What is the mood, though? Is it feeling like there's a turn, an inflection point for the better for an industry that has spent the last couple of years, so to speak, out in the Arctic?
No question. If we don't have a taco event of some crazy sort, no question. The IPO window is wide open right now. And the market seems to like fintech. A lot of enthusiasm for Circle and now Chime.
Understood. Logan, tell me a little bit about Chime and what you think about its debut. I mean, isn't this the company that pioneered the get paid as soon as get your paycheck as, quicker than every 2 weeks or whatever?
Yeah, I mean, Chime's a really impressive business. And I think what I find most interesting is it seems to be a poster child of what the 2021 vintage peak financing companies need to do. Chime raised a $25 billion valuation back in 2021. They went out, originally priced the IPO around $10 billion. Now they're trading around 17, 18 billion. So they took a little bit of medicine, but they were able to execute really well over the course of the last couple of years. If you look at the financial profile of the business and what Chris and team have been able to do, it's really remarkable how this business has gone from an extremely unprofitable, modest growth company to a free cash flow break-even company that's growing at an even accelerated pace. So kudos to the team on how they've been able to execute.
But we have to kind of throw out those data points, right, Logan? So if you were a venture capitalist who invested at that valuation in 2021, this is not great for you. If you're, maybe Chime itself or some of the employees who thought, hey, that's the valuation I was looking, or maybe they're going to grow into it. So are other companies, you think, going to follow suit now? And who might those be?
I think they have to. I think this is just an element that the entire market needs to deal with. The stock market trades every second of the hours that it's actually open. Venture capital market trades once every year, maybe 2 years. If you're an AI company, it feels like it's every month or so. But the pricing, we put this big onus and drive all this momentum behind celebrating private market financing, when in truth, it's still just a market. And so I think that this is a healthy recalibration. And I think CEOs are now getting under the psychology that you're not beholden to what the last round that you raised at. And it's something that we're going to see more and more companies go forward with.
Yeah, well said. Totally agree. So, Duncan, who else then? Do you think other companies have gone through this valuation reset and are ready to come out into the public markets now? Like, for instance, Deirdre talked to Databricks yesterday. He wouldn't commit to whether they were looking in the near term about an IPO, but said that still remains their plan at some point. And they're one of many that are still waiting on the sidelines.
I think if there's no taco event the next few months, we're going to see a stampede of these unicorns going public in September or October. Because basically, a lot of them need to raise money. And a down round is much better than that. Come through. Okay, I know my connection's a little unstable right now.
It did. Well, I saw that the fall, you think, is the timeline if the market and the administration sort of complies with how you're describing. I just think it's fun to have someone on in an Arctic jacket. Go ahead, Duncan.
Yes.
Last thought.
Well, Nicole, I'm just saying it didn't come through that a down round is better than ending up in the glue factory for dead unicorns. So I think people will all decide, I'll take the down round, forget the crazy valuation in 2021, and let's get liquid, let's get out.
I love that.
So I expect that to be overcome very quickly by various boards.
In other words, the point you're both making is the stigma of having a down round and an IPO is gone, and it's still better to go and kind of whatever that means. And and just kind of get on with things and hand it over to the public markets. And based on these performances, you'll be right back to where you were in valuation on opening day. So thank you both, Duncan Davidson, Logan Bartlett, joining us to talk
Kelly,
about
one more thing to say. There's $4 trillion trapped in unicorns, $4 trillion of capital trapped in these things. We have to recycle it. We've got to get it out. The only way to get it out is take the pain, take the down round, get liquid, and move forward and invest in AI.
All right. Well, as cheerleaders of having more public invested stocks to invest in, we're all for it. Gentlemen, thanks again, Duncan and Logan.
Thanks,
we appreciate it.